Property and casualty initial license training. This is going to be on chapter 10. This is the beginning of the commercial lines. This is going to be commercial property policies. So businesses and other entities may own or otherwise have insurable interests in a bunch of different types of various properties. And so this is going to address those types of policies. So first thing we're going to talk about here is commercial package policies, or also known as a CPP. This could be written together as a package or as a motto line. If it's going to have a CPP, there are seven coverage parts that's going to be there. Again, if there's no amount listed for the premium or the coverage limit, then there is no coverage for that section. But the CPP is going to be inclusive of general liability, commercial property, inland marine, commercial auto, equipment breakdown, crime insurance, and farm owners insurance. There is not going to be any coverage in a CPP for workers' compensation, professional liability, banking, auto dealers, aviation, or ocean marine. So some common declarations for policy declarations under this are going to have the first named insured is going to be the policy owner that has all the rights and responsibilities for all the commercial policies, and you're going to see that first named insured is everything when it comes to commercial. Literally, this is the first named insured on the deck page. So it's very important when you write this up that the first named insured has all that information. The territory for commercial property policies is going to be the same as what we've been talking about generally for all of the personal lines. It's going to be the United States, its possessions and territories in Canada, but no coverage in Mexico. Cancellation, changes, and premiums. This is going to be the responsibility of the first named insured. As we discussed earlier, as is typical in commercial policies, the examination of books and records allow for the process to move forward without having to do a full valuation or appraisal of the property prior to doing the actual writing up of the insurance. Allows the insurance company to audit within 3 years after the policy to get everything back to where they would like it. Inspections and surveys. Under commercial policies, the insurance company has the right to do these inspections, but there is never an obligation, and the insured should never take credit for the inspections and surveys that the insurance company does for any kind of code compliance or anything like that. Transfer of rights and duties. Just like on personal lines, this will require the written consent of the insurer to make any changes to the policy. For the commercial property policies, they use a business and building personal property form. This BPP, if you will, is going to be one of 3 different coverage forms. The good news for memorization purposes is you don't have no codes to memorize here for commercial lines. It's just going to be 3 names that you need to know of the different coverage types on the forms. So they're going to be basic, broad, and special, which is similar to the coverage names that you had there for personal lines. Now, for the property that's going to be covered here, you're going to get the building that was described on the deck page, any items that are used to maintain and service the property, any permanently installed machinery and equipment. Because we're dealing with a larger amount, typically commercial property policies, you can cover newly acquired buildings for the first 30 days. And of course, any materials used in renovation or construction. Business personal property that's covered is anything that would be within 100 feet of the structures, any furnitures or fixtures that are not permanently installed, any machinery or equipment that is not personally installed, anything that is held for sale. The name for this in insurance and legally is called stock. So even if it is normally going to be excluded, like say it's animals or some type of plants or something like that, but if you're holding those for sale and they're stock, they will be covered even if they are not typically going to be covered. Any personal property that's owned by the entity, the insured, any tenant improvements and betterments, and up to $2,500 for personal property of others. What's not going to be covered under the BPP is going to be money, any animals, contraband, foundations, land, antennas, satellite dishes, signs, unless they're physically attached, and then only up to $1,000. Crops, trees, shrubs, fences, and plants. So you will get additional coverages that are a little bit different than on a standard personal property form. Debris removal, because this can be significantly higher on the claims, is limited to no more than 25% of the total loss. Up to an extra $10,000 can be added at the discretion of the insurance company. You do get the same type of property removed on personal property options for commercial, and that's going to be 30 days. You do get up to $1,000 for the attached signs and fences, and up to $250 for any trees, shrubs, and plants for limited name perils basis only, just like on the personal options that we discussed earlier. Loss payment for commercial property on the BPP, the insurer has to pay their option of the following, and generally they're going to use the one that benefits them the best. They've got the actual cash value or the cost to repair or replace. They can take the property at an agreed or appraised value. They can repair, rebuild, or replace with like, kind, and quality. Recovered property, just like on personal property for commercial, same rules apply. Insured has the option to take and return the payment if they've already received the payment. They can return the payment and keep the property, or they can keep the payment and then sign over the property to the insurance company. Vacancy works the same way. No people or personal property will suspend certain perils after 60 days. The perils that will typically get suspended on commercial are going to be vandalism, sprinkler leakage, water damage, theft, or attempted theft. For those commercial risks where you're going to want to cover the foundations, a builder's risk policy is typically used. This is a separate policy than the BPP. This can either be used on a single or multiple projects. This is typically going to be at a completed value, meaning whatever the value is at the end of the project. 100% co-insurance requirement is going to be in place on here. Normally you're looking at typically 80%, but on these policies they are requiring 100%. So that means if you don't cover up to the full completed value, then you are going to have to suffer the penalty on any partial losses. This is going to cover the building or structure, temporary structure, foundations, materials, and supplies. What's not going to be covered, what's never covered under any property policy, is land or water. They're not going to cover the trees, shrubs, or plants, antennas, or dishes, satellite dishes. Signs will be not covered unless they're attached, and then only up to $1,000. Typically on the coverage for builder's risk, the coverage is going to be for a year, and it begins when the construction begins. And it's going to end either when the policy is the project is expired or canceled. It's been abandoned without any plans to complete it whenever the property has been accepted by the purchaser, or 90 days after the construction has been completed, or 60 days after the construction is completed and it's been occupied or put into its intended use. Or, of course, when the insured's interest in the property ceases, right? So that's kind of the general catch-all. As an option on commercial property policies, you can get business interruption coverage. This is going to be indirect loss that is only going to be payable whenever a direct loss is already covered. Business income or extra expense are your two options here. So business income is going to be for a business that needs their physical premise to operate. An example of a business income situation would be a burnt down restaurant like a Burger King, right? They don't really have any Burger King food trucks, right? Because the apparatus required to run a Burger King, right, is not something that's conducive to a smaller footprint. Therefore, if the Burger King burnt down, it would need to be physically back in place before it could run again. Right. So in this case, what happens is you get paid back for up to 12 months of your lost revenue from the business after a 72-hour waiting period. Now, when that business does decide to come back into the business, the general public may not know what's going on with that business. And so the extended business income option allows for that company that has that exposure to make up for a partial income loss for up to 60 days after they've gotten back open until they can get back up to their normal levels of income. Now, for the other type of business interruption coverage, it's going to be called extra expense. Now, this is going to be for a business that's going to keep operating no matter what happens, right? So, example of this would be a fire closing down an insurance office, right? The insurance office, we get some nice things that we do there, but if it wasn't there, can we still work? Yes, we can. Does it make it so that there's extra expenses that we will incur because the office has certain things that we don't have? Yes, right. So only those necessary expenses incurred after a direct loss are going to be covered under there. Things like the mortgage and all that, just like on personal property, is not going to be covered. Now, the good news is there is no waiting period to claim this because obviously it's extra expense. It's not going to be something that is needed to wait on. Now, for the forms, basic form under commercial property policies are going to cover the original 3 plus the 9 extended coverage perils. And then they're also going to add 2 more in there under the basic form. So basically with commercial property policies under basic, it's going to be a little bit more than what you get for your standard personal lines, right? So you're going to have fire, lightning, and internal explosion. But that internal explosion is going to be extended off under the extended coverage to external explosion as well as windstorm and hail, smoke, aircraft and vehicles, riot or civil commotion, volcanic action. And here we have a 168-hour occurrence standard. So you get up to 1 week of coverage under this, which is a little bit more since the exposures under commercial are going to be a little bit more. Time for one deductible. You're also going to have vandalism. And then the 2 new ones that you're going to get here are going to be sprinkler leakage and sinkhole collapse. Under broad form coverage, this is going to add to their basic with additional coverage for falling objects, weight of snow, ice, sleet, or people, limited coverage for water damage, collapse, limited coverage for fungus, wet or dry rot, and bacteria. And then finally, the commercial property policy open perils option is going to be the special form. This is going to be everything that is specifically excluded, which is going to include the ordinance or law, earthquake, off-site utility loss, water damage, other than what was discussed earlier, mechanical breakdown, and theft of building materials for building under construction. For the earthquake coverage under commercial property policies, the earthquake and volcanic coverage is going to cover that 168 hours for the occurrence. That means one deductible, so all the aftershocks that happen from the initial are going to be covered for up to a week under one deductible. This can be listed as a separate policy if it's not part of the CPP. If it is, it would be called a DIC policy, a difference in conditions policy. Typically, there's going to be pretty expansive equipment like boiler systems or HVAC systems at a commercial building, and therefore equipment breakdown coverage is an option that is typically used because it's specifically excluded under the policy. It has to be bought back here as an endorsement. So damage caused to covered property by the breakdown of this covered equipment is going to be covered under this. And the majority of the premium for this is going to pay for the inspections. So basically, it's just one of those self-serving type of situations. If you have the equipment, you buy it so that you cover the cost of the inspections, so that you know about any problems that are going to occur prior to, hopefully, any damages occurring. And then finally, under commercial property policies, this is where we would have coverage for farm owners, for farms. This is commonly called a farm and ranch insurance. This is going to have specialty coverage that is going to cover both the personal and business aspects for the farms. So the way that the policy works is it's broken into basically three different sections. The cause of loss forms are going to be the same as what we talked about under all CPP policies. So it's going to be either basic, broad, or special. The coverages under the deck page, coverage A, B, and C, and D are going to look exactly like a homeowner's policy. So coverage A is going to be for the dwelling and attached structures. Coverage B is going to be for other or appurtenant structures, including fences, garages, sheds that are used for dwelling purposes. This is going to exclude any property that is used in farm operations. Coverage C is going to cover for household personal property. No farm personal property can be covered here. And then coverage D is going to be for any loss of use for things that are not farm operations. Say you had a rented out portion of the farmhouse or the bunkhouse or something like that. This would cover for either additional living expenses or loss of rental income under coverage D. Farm property and operations coverage is going to be similar to the CPP. So this is going to be coverages E, F, and G. So this is going to mirror that CPP coverage that we just went over. Coverage E is going to be for any scheduled farm personal property, whether it's on or off the premise. Usually this is going to be higher ticket items like threshers and stuff like that that can be definitely significant costs, high hundreds of thousands, if not millions of dollars. Coverage F, this is going to be unscheduled farm personal property on a blanket basis. So, you know, a whole bunch of, farm vehicles and things like that, not over the road type stuff. Might be covered here. And coverage G is going to be for farm structures. So typical items covered here are going to be barns, silos, fences, machinery and equipment, livestock, poultry, other animals. For some reason, turkeys are not covered under the farm owners policies here in Texas. Vehicles for farm use that are not licensed for road use are going to be covered here. And then any farm products that are harvested or stored, there is no coverage under farm and ranch insurance for any crops in the field. The only thing that covers the crops in the field is going to be federal and private crop and hail insurance can be available. And then the last bit of coverages here under the commercial property policy for farm owners is going to be for liability coverage. Now, liability coverage is going to mirror the commercial general liability coverage. We're going to have a whole section on that here in the next section that we're going to do here on chapter 13. So we'll go into more detail at that point, but coverage H is going to be for bodily injury and property damage liability. Coverage I is going to be for personal and advertising injury, and coverage J is going to be for medical payments. So what's going to be excluded here? Workers' compensation, so injuries to farm employees are not going to be covered. Motor vehicles, except for those that are not, that have already been talked about, those that are used in the farm operations, not for over-the-road use, are not going to be covered. Those are going to be excluded. They need to have either commercial automobile or personal automobile, depending on what type of exposure you're looking at there. Pollutants, crop spraying, and dusting, those are just too high of exposures and can't be covered by farm and ranch insurance. Custom farming operations, this is something that is excluded. Anything over $2,500 of farming for other farming operations, which is actually pretty common in this industry. Just know that you can buy it back by endorsement by eliminating that $2,500 limit that's on there. So now we've got time to go over the questions for this section. Question 1, which commercial cause of loss form provides open perils coverage? A, basic, B, broad, C, special, or D, both special and broad. In this case, the only one that has open perils coverage is going to be C, special. Number 2, loss caused by sprinkler leakage is covered under which commercial property cause of loss forms? Basic, broad, A, basic, B, broad, C, special, D, all the above. In this case, it is covered under basic, so therefore it is covered under both broad and special, so D, all the above, is the appropriate and correct answer here. Number 3, which commercial property cause of loss form or forms cover or covers collapse? A, basic and broad, B, broad only, C, special only, or D, broad and special together. In this case, both broad and special will cover both collapse. It's not covered under basic, so broad and special is the correct answer. Number 4, which of the following would be covered under a builder's risk coverage form? A, the building under construction, B, the foundation of the building under construction, and C, fixtures, machinery, and equipment used to service the building if they will become a permanent part of the building and are located within 100 feet of the building, or D, all the above. In this case, all of those are going to be covered by a builder's risk coverage form. D, all the above. 5, which of the following policy forms would be best protecting a business that must keep operating at any cost after a loss? A, extra expense, B, business income, C, gross earning, or D, contingent business interruption. So the best answer here is going to be A, extra expense. This is that business that's going to operate at any cost after a loss. Number 6, which of the following statements about farm insurance is not correct? So 3 of these should be correct and 1 should be false. A, farmers may buy monoline policies or a package policy to cover both their personal and commercial exposures. B, farm liability usually covers farm employees as insureds but does not cover them as claimants if they were to get injured. C, most farm insurance will cover the farmer's crops planted in the field. Number D, a well house within 250 feet of the dwelling providing water to the dwelling is covered as an appurtenant structure and not as a farm building. Right, so B, C, and D are all correct answers. So A, farmers may not buy monoline policies or package policy to cover both their personal and commercial exposures. That is not correct. All right, number 7, all the following would be an insured loss by farm insurance except. A, damage to the crops by flooding, B, a tractor fire, C, when a tornado destroys a barn, or D, when a fire damages a silo. So B, C, and D will be covered by farm insurance. A, damage to the crops by flooding will not be covered. Which of the following statements concerning the commercial package policy is not correct? A, almost all commercial risks are eligible for coverage under the commercial package policy. B, the insured can choose a variety of eligible commercial coverages to tailor the package to fit his specific business insurance needs. C, a complete commercial package policy includes common policy declarations, common policy conditions, and 2 or more coverage parts. And D, a commercial package policy can include inland marine and aviation insurance. So of the 4 answers here, the only one that is not correct is D, a commercial package policy can include inland marine and aviation insurance. Aviation insurance would not be able to be covered under the CPP. Number 9, which of the following is not contained in a CPP common policy declarations? Would it be A, the conditions specifying the insured's duty following a loss? B, the policy period? C, a description of the business being covered? D, the insured's premium for each coverage part purchased? In this case, it's going to be A, the conditions. If you remember back to our policy structure of DICE, declarations, insuring agreement, conditions, and exclusions. Option A is conditions. It's in the C section, or the rules and procedures of the policy, not in the declaration section. And then number 10, the majority of the premium for equipment breakdown insurance pays for A, claims, B, inspections, C, administration, or D, taxes. The answer here is inspections, A. All right, we're going to move on now to Chapter 11, Business Owner Policy, or BOP. These are specialty commercial policies that are designed to fit the needs of small to business, medium-sized businesses that have low risk. This section, as far as the way that the state looks at it, is more about what businesses aren't covered, more so than it is about which businesses are covered. So a lot of times they're going to ask you which businesses would not qualify for the business owner policy. So we use an acronym of SOAR to determine the eligible types of businesses. S is going to stand for service and processing businesses. These are going to be up to $3 million in annual gross sales, up to 25,000 square feet in floor space. This is going to include specialty contractors like electricians, plumbers, etc., but it's not going to take an exposure from a general contractor. This also can include some small self-storage facilities. The O is going to be for office buildings. In this case, office buildings are going to be covered only up to a maximum of 6 stories and up to a maximum of 100,000 square feet. If it's above that, it's going to be too high of an exposure. A is going to stand for apartment and residential condominiums. Again, you're going to be limited to a maximum of 6 stories, in this case less than 60 units. And then R is for retail or mercantile businesses. So you're not going to be able to cover the Chick-fil-A or the Starbucks here because it's going to be less than $3 million in annual gross sales and up to 25,000 square feet in space. So the ineligible businesses, because they have too much risk, are going to include automobile sales and servicing operations, any household, personal property, and dwellings. So this won't cover Airbnb coverages. Any manufacturing from a business will not be able to be covered. Bars, grills, places of amusement, any restaurants that serve alcohol, mainly on those because of the alcohol exposure. Any banking facilities like financial institutions, any wholesalers, government agencies, general contractors, and warehouses. What property is covered under a BOP? So this is going to be the same as a CPP policy, but there's only 2 coverage forms here. The standard deductible is only going to be $500 on these. So you're either going to have a standard on a broad name perils basis or a special coverage on an open perils basis. You're going to get the additional coverages that don't cost you anything extra, whereas they do on the CPP. Business income and extra expense. So those contingent business interruption coverages are going to be automatically included. Money order and counterfeit paper currency up to $1,000 is going to be covered as an additional coverage on the BOP. So you'll see some of these businesses will say we accept nothing larger than a $20 bill. And the reason they do that is so that they can cover this through the insurance. Forgery and alteration is going to be covered up to $2,500 and signs up to $1,000. So for extra premium on the BOP, you can get coverage for money and securities, employee dishonesty, and equipment breakdown. Liability coverage under Section 2 of the BOP is going to be similar to the commercial general liability policy. Bodily injury, BI, and property damage, PD, are going to be covered under the first section. Personal and advertising injury for any non-physical injuries like libel or slander are going to be covered under the second section, and you're going to have medical payments to others in the third section. Aggregate limits for products and completed operations are going to be twice the occurrence limit, as is general aggregate. And you have a fire legal liability FLL limit of $50,000, which can be increased. We're going to go into more detail of these in Chapter 13, so we're going to kind of just go over the basic, which we just did, of coverage for liability under the CGL section. Endorsements that are selected here on the BOP are going to be hired and non-owned auto liability. So if you don't have a commercial auto policy separately, like say the only exposure you have is going to be for your employees using their own vehicles, then you may want to go ahead and add this onto your policy as an endorsement, so you don't have to keep a separate coverage and keep your exposures all there in one place. You can have a valuable paper and record coverage. So if you have blueprints, drawings, films, they're going to require a receptacle warranty on this, which does mean that you're going to have a requirement when they're not in use to be put into a receptacle in order for that to be covered. We're going to talk more about that as a standalone in the next section, Chapter 12 for Inland Marine. The other one we've got here is a protective safeguards warranty. This gives you a discount for a working burglar or fire alarm for the commercial property under the BOP. Very similar to the homeowners policy for the warranty for the working alarm there. All right, so now we're to the point where we're going to go ahead and ask some questions about the BOP section. Number one, which of the following businesses would be eligible for a business owner policy? That implies that 3 will not and 1 will. So in this case, A, garage, B, bank, C, tailor, or D, warehouse. In this case, an artisan contractor as a tailor would have coverage, but the garage, bank, and warehouse would be too large of exposures. So the answer is C. Number 2, what is the amount of fire legal liability coverage on the business owner policy? A, $75,000, B, $100,000, C, $50,000, or D, $25,000. Standard amount of FLL coverage is going to be $50,000, C. Which of the following is true about the business owner policy? This is going to be the true statement. They've got 3 that will not be true. A, it gives the insured great flexibility in picking coverages that can be included in this policy. B, it can be written for almost any commercial insured. C, it provides a prepackaged policy of property and liability coverage for certain types of small to medium-sized businesses. Or D, it provides property-only coverage. So the only one that is correct here is C, it provides a prepackaged policy of property and liability coverage for certain types of small to medium-sized businesses. Number 4, which of the following can be covered as a business personal property form business personal property under the business owner policy? A, airplanes, B, stock, C, company cars, or D, land. In this case, this is going to be B, stock. Anything held for sale will be able to be covered under the BPP form. let's see here. Joe's Cleaners, number 5, does not own an auto. The manager uses his car to make nightly deposits at the bank. The manager had an accident while making a deposit, and the claimant also sued Joe's Cleaners. Which coverage did the insured need to add when buying a business owner policy BOP to provide a defense in a case like this? A, non-owned liability. B, hired auto liability. D, nothing. The BOP automatically includes this coverage. Or is it going to be D, the business auto coverage? So in this case, for number 5, this is going to be A, the non-owned auto liability. Number 6, loss of business income coverage under the BOP covers what period of time? Is it going to be A, from the date of the loss to the policy expiration date, B, an unlimited amount of time, C, 12 months, or D, 2 years? So in this case, this is going to be only for 12-month period, C, 12 months. Number 7, how much is the general aggregate limit on the business owner policy? A, 500,000, B, 1 million, C, twice the occurrence limit, or D, twice the products and completed operations limit. So number 7, this one is going to be C, twice the occurrence limit. Number 8, the waiting period for extra expense coverage is going to be A, none, B, 10 days, C, 2 days, or D, 24 hours. In this case, no waiting period is going to be in place for extra expense coverage, A. And then number 9, all the following can be insured under a business owner policy, BOP, except, so what can't be insured under a business owner policy? A 20,000 square foot small self-storage facility, B, a 10,000 square foot bank office, C, a 6-unit apartment building, or D, a 15,000 square foot plumber's office. So the one that can't be covered is going to be the bank exposure under B, a 10,000 square foot bank office. All right, that's the end of the business owner policy. We're going to move on to commercial marine insurance. Now, you're thinking of water when you think of the word marine. In insurance, marine actually is more associated with mobile than it is with water. The exposures that are going to be covered on the water are going to be only the ocean marine coverages. So this is when you've got either an import or an export. It's called ocean marine, and this is for property over water. Primarily, most of the commercial marine insurance is actually not involving water at all. It's going to be for property that is either on the ground or in the air. This is going to cover 4 different categories. Domestic shipments, which is going to be the largest section of total policies covered of all insurances. Instrumentalities of transportation and communication, things like bridges, tunnels, pipelines, cell phone towers, etc. These are going to be covered. Commercial property floaters and personal property floaters. So what is a floater? A floater is something that covers mobile property. Typically, these are going to be on an open perils basis without any territory listed specifically, so they're going to have worldwide coverage. So we're going to be testing mostly on the commercial inland marine floaters, so that's what we're going to go over here. The first one we're going to go over is going to be an accounts receivable floater. In this case, whenever you have receivable records, these are very valuable to a business because in an instance where somebody's not paying, you have to produce the records so that the liability is clear to the other party so that you can get that paid out. So they require, when not in use in these cases, to have coverage under this in case there was a fire or some other type of peril. You do have to have them in use for that to be covered. Otherwise, they have to be put away in a receptacle. So if you went away for the weekend or overnight and the peril happened and it wasn't in the receptacle, then there would be no coverage there because this is a warranty. This is stating that you're putting special rules in place that would void out the policy just if you didn't follow them. The next section here is a pretty big section. This is typically excluded on all property policies, so therefore this is where you would typically cover this exposure for any Bailey or customer liability. Bailment is going to be defined as the delivery of property of the owner, known as a bailor, to somebody else as a bailee, to be held for a special purpose and then returned. So a bailee coverage form are used to cover the losses from the insured perils to the customer's property that is in their care, custody, and control, right? So this is going to be for exposures like dry cleaners, laundries, repair shops, furriers, warehouses, right? All these things are going to have those special bailee or customer liability coverage exposures, and this is where this is going to typically be covered. Commercial article floaters. This is for the owners of commercial cameras, instruments, theatrical property. Those types of things are going to be for when they're transporting them around for like displays or shows. And so this is going to cover these people's equipment when it's in motion, no matter where it is in the world. Next one is going to be contractor's equipment floater. This is going to be for coverage in the U.S., its territories, possessions, and Canada, but not in Mexico. This will cover your equipment while it's in use, whether you're renting it or whether you're owning it. It also covers it in the process of transportation to and from the job and storage in between jobs, as well as when it's being used on the job. So this is going to be written on a named peril or open perils basis. The large items are covered usually with a blanket amount for special, less expensive items, but the large amount ones are going to be usually scheduled specifically. The only thing that will cover intangible property, such as data, electronic data, is going to be under an electronic data processing commercial inland marine floater, also known as an EDP policy. This not only covers the data, but it covers the hardware and the media that includes the data there. Equipment dealers, this is specialty bailee coverage for agriculture and construction dealers for servicing the equipment. Say those threshers that need to be brought in for an overhaul on their machinery, those can be covered under equipment dealer coverage under a commercial marine floater. The next one we're going to talk about is an installation floater. So this is going to cover from whenever the item has been picked up, such as a large air conditioning unit that goes on top of a building. It's going to cover it from wherever it's picked up. Then it's going to be covering that all the way through delivery and installation and testing until it's been accepted by the owner. The next one we're going to talk about is a jeweler's block. This is going to cover the insured's merchandise, anything that they hold for sale as stock, as well as their bailee coverage and for things that are temporarily on display. Next one we're going to talk about is signs. This is the majority of all sign coverage is going to be under commercial inland marine floaters. Typically, you're only going to be covered up to $1,000 under most property policies. So this will give open perils coverage for the insured signs, specifically insured worldwide, including all different types of signs, including neon, fluorescent, automatic, mechanical, jerry dome, whatever, as well as the bailee coverage that might be in place if it's going in for servicing. Valuable paper and records. This is going to be the same as what we talked about with accounts receivable. This is going to be the standalone option versus what was available under the BOP policy as an endorsement. It also will have that receptacle warranty. Typical insurance for physicians and surgeons equipment. This was for a lot of mobile equipment. They used to call this black bag insurance because the doctors, when they made house calls, would carry everything that they needed for doing those house calls in their black in a little black bag that they would take around with them. Nowadays, they're going to cover individuals in the medical or dental profession for loss to valuable medical and dental equipment, materials, and supplies, including office equipment, furniture, and improvements and betterments, either on premise or off premise. This is not intended for hospitals, schools, or other institutions, but if you've got a clinic where you've got equipment that needs to be going from one location to another, especially in rural areas where there may be, 6 or 7 clinics covering a 700 or 800 square mile area. In that case, right, you may not be able to keep the equipment at each of the facilities, and you got to take it from place to place. And this would be able to cover that equipment when it was going from place to place. And then the last and largest section of commercial marine inland coverage is going to be carrier and transit coverage. This is the oldest form of inland marine coverage. Transportation coverage is available to cover the exposures of the shipper, the carrier, or the consignee of the goods. So the 3 parties that are going to have financial interest in carrier and transit coverage: the shipper, this is the person or company that is sending the goods; the consignee, this is the person or company that is receiving the goods; and then the in-between, which is going to be the carrier, the company that transports the goods. There are 3 different types of carriers. There's common carriers, transporting the property of anyone that hires them. Examples would be FedEx, UPS. Contract carriers, these are going to be companies that only transport property of others for which they have a written contract or have been hired that directly. Examples would be home or office furniture movers. And then private carriers, these are any companies that transport their own goods. Examples here would be Target, Walmart, Amazon. Those would be private carrier options. The carrier is going to be considered responsible for the safe delivery of their property, and therefore common carrier cargo liability is going to cover that carrier's legal liability for any damage or loss to the property that is in their care, custody, and control for the transportation. So this is basically bailee coverage for the carrier, so that when they're transporting the goods safely, it is going to be covered, and if something does happen, that it will be insured. Motor truck cargo policy, this is going to be on 2 different forms. One is going to be a trucker's form. This is typical for common carriers. So they also call this commonly common carrier cargo liability. And then the other type is going to be an owner's form. This is typically those that are shipping their own goods on their own trucks. That's for the owner's form. Transit coverage is usually going to be under 2 different types. It's going to be an annual transit form or a trip transit form. So the annual transit form is going to be for all coverages for all shipments from that carrier for the entire year. It's going to cover all exposures for everything in transit for the entire year. And then the trip transit form is typically used for those situations in which they are only going to be covered for that specific trip, right? So whenever you buy that special stuffed bear for Christmas for your daughter, that one shipment that gets the bear to you will be covered in that case. All right, time to do some review on Chapter 12, Commercial Marine Insurance. Number 1, which statement is generally not correct regarding inland marine policies? A, instrumentalities of transportation and communication are insurable. B, many inland marine policies also cover the bailee coverages or exposures of the business. C, mobile equipment such as bulldozers, forklifts, and road graders may be covered. Or D, buildings and personal property at fixed locations may be covered. So the incorrect statement is going to be D, building and personal property at fixed locations may be covered, right? Remember, marine means mobile, therefore fixed locations would not be able to be covered. Number 2, inland marine insurance is commonly used to insure all the following items except. So what would not be covered by inland marine insurance? A, household furniture, B, accounts receivable, C, theatrical property, or D, tunnels. In this case, household furniture under as fixed personal property would not be covered typically under inland marine insurance. Number 3, which of the following forms provides coverage to dry cleaners for the coverage for the property of their customers? Is this called A, customer's property liability policy, B, customer's protective liability policy, C, customer's property policy, or D, Bailey liability policy? D, Bailey liability policy, also sometimes called customer liability. That one is going to be the correct answer. Number 4, which floater would insure the cargo being transported by an independent truck owner? Is this going to be A, trip transit policy, B, Bailey customer, C, motor truck cargo truckers form, or D, an installation floater? All right, so for the common carrier cargo, this is going to be motor truck cargo truckers form for an independent truck owner, one that's not working for a company like Amazon or Target. Number 5, the motor truck cargo policy. A, insures the truck carrier for liability for losses to cargo. B, covers any loss to cargo in transit regardless of whether the carrier is liable for the damage. C, insures the shipper for all incoming or outgoing shipments during the policy term. D, provides coverage for a shipper on a single shipment of goods. The answer here is going to be A, insuring a truck carrier for liability for losses to cargo. Number 6, the installation floater covers property in all the following situations except. So when would it not cover on an installation floater? A, at a store location awaiting the installer to pick up the property. B, in transit to an installation site. C, while being tested. D, while being installed. So the liability does not start under the installation floater until after it's been picked up. So A, at a store location awaiting the installer to pick up the property would not be able to have any coverage. Number 7, the physician and surgeon's equipment floaters going to provide coverage A, on premise only, B, off premise only, C, both on and off premise, or D, on equipment in a hospital. Correct answer here is going to be C, both on and off premise. And then number 8, a fire is a huge exposure to the valuable paper and records, and insurers require that they be in a waterproof container when not in use. What is this condition called? A, a receptacle warranty, B, a container requirement, C, a valuable paper warranty, or D, a fire protection warranty. The correct answer for this is going to be a receptacle warranty A. And that's going to be the end of chapter 12.